You're listening to the Weekly Wrap-Up on Sprott Money News.
Well, greetings once again from Sprott Money News and SprottMoney.com. It's Friday, October the 4th, 2019, and this is your Weekly Wrap-Up. I'm your host, Craig Hemke, and joining us as usual is everyone's favorite retiree and master angler, Eric Sprott. Eric, how are you today?
Hey, Craig, good morning. I'm in the Turks and Caicos, and I'm out fishing here as we're recording this, so I get to do two of my favorite things at the same time.
You got anything on the line yet this morning?
We've had one small grouper on the line, and we're looking for the big guy.
Gotcha. Well, if you get called off to reel something in while we do this, I'll just take over. How about that?
Okay.
And before we get started, just a reminder about the terrific Sprott Money and SprottMoney.com. Here in 2019, as you might imagine, all sorts of interest in purchasing precious metal, physical precious metal. But one thing that keeps new investors from taking the plunge is having a secure place to store them. You can always take delivery and store it yourself, but at Sprott Money, you can both buy and store your precious metal. We have 6 secure vaults strategically located in some of the safest countries in the world. Plus, Sprott Money storage clients receive exclusive offers from us. So please check us out at SprottMoney.com. Or, of course, just give us a call at 888-861-0775. Eric, we've had quite a week. Big down back on Monday as the quarter ended, but we've been coming back up ever since, and we had the employment numbers this morning. What are your thoughts here on this Friday?
Well, as I mentioned on our call last Friday, we still had to get through options expiry in the UK and the LBMA, which I think effectively expired about 11 o'clock our time on Monday morning. And miraculously, that's when gold bottomed.
Yeah.
Which makes you believe 100% in the theory that people who can force prices to a low to make options valueless, i.e. max paying for the customers, they do that, and they do it with great regularity, and we saw it then. And it's interesting. We don't know how many contracts were covered. The open interest hasn't fallen that much, particularly in silver. So I hope that they're short as much as they're short, because we've had lots of good things come along in the meantime that are all very precious metals positive. And I'd probably start with, we had Jobs Day today, and there was nothing really special right home. I think the number was 134,000. Interestingly, the wages didn't go up at all. But we had some economic things, and the key economic release was the ISM for non-manufacturing, which was weak. You know, maybe even more important was the car sales. I think the car sales, I don't know if it's an official number, but unofficially they're down 12% in the month. And as I've reported before, we had 25% declines in India. We see big declines in Europe, and you say, well, what is going on here, okay? And it happens to be my view that people are at the end of their rope. There's just too much inflation, too many ads on, too many taxes. I read about an example of that just recently, where the average cost of health insurance in the States with an employer plan, and the amount that the employee has to pay this year went up 8% year over year. If I'm not mistaken, in the last decade, they've gone up something like 64%, and the wages have gone up 25%. Well, you know what? Healthcare is a big expense item. You can't have 40% increase in healthcare, which might have started at, let's say it started at 15%, it goes up by 40%, that's 6% more. That's 6% of your wages, net, that you got to come up with. These are not small amounts of money. So it happens to be my view that the average worker is just at the end of his rope. The other big cost increase that's going on is the cost of cards, credit cards, and bank charges. I saw a thing where the average interest rate in a credit card in the U.S. has gone from something like 24% in the last year.
Yeah.
So the banks are finding ways to make money that they can't make on the interest rate spread anymore. So I think inflation is massively understated. People are defaulting on their car loans, and this is with theoretically in a low interest rate environment when we have that problem. So I think it's here to stay, that problem.
Yeah, and a lot of folks can't figure out why it is that the Fed had to reverse so quickly, though you and I could see it coming. And that's all part of it. Those higher interest rates, the higher credit card rates, mortgage rates. It's not just the public debt that can't be serviced. It's the private debt that can't be serviced if rates go any higher.
Well, the worst thing about the private debt, they don't get 2% interest, okay?
Yeah.
They get whatever somebody can charge you. And, guys find ways of charging more all the time. So the average guy's rate is way beyond what the credit markets would suggest, and that's why they keep getting squeezed here, because interest costs, in fact, the interest on car payments went up 8% last year. The charges for car payments went up 8%. So you can see what's going on, and it's not good.
And Eric, those interest rates are certainly falling. We can see that in the bond market. 2-year note falling way back. It's down almost 40 basis points just in the last couple of weeks. It certainly seems with all the economic data that we're looking at another Fed funds rate cut later on this month, maybe another one in December. That trend certainly working in our favor of gold and silver, too. It is, and of course, as we've discussed before, this whole repo facility that the Fed has established might become permanent, i.e. it's really could be another Q4, which can only be good for gold. I mean, everybody in the world gets it, okay? You look at the currencies in the world, and it's not so much the U.S. currency is probably the only strong one, but you imagine if in Britain you're gold at a record high, Japan is probably at a record high, India is at a record high, Brazil a record high. I mean, there's a lot of people enjoying the fact that gold's going up here, so it's only a matter of time, perhaps, that if the Fed starts cutting rates, that U.S. dollar starts coming under a little bit of pressure too, and it will be a little more profitable for American residents to consider having quite a large position in gold and silver. Eric, before we get to some of the specific miners this week, I just want to ask you a question about the sector in general, because I know it's frustrating a lot of folks in that we've had this tremendous rally in gold, $300 or so, and silver's been participating as well, but yet, the GDX is mainly maybe up 40 or 50%. It doesn't seem to catch a consistent bid. To my eye, it looks like we still don't have a lot of institutional acceptance of this idea yet. We don't have a lot of institutional money flowing in. It's just like the realm of day traders. In your experience, what is it going to take to wake up the investment world? Is it a good quarter or two of earnings, or what will finally get some institutional flows into our sector? Well, the first one, of course, is continuing increase in the price of gold and silver, which I think we'll get here. I mean, we're not far from the all-time high, right? A recent high, the 1,550 price. So if we could get a little push here and get in the new high ground, the institutions will look back at the last, let's say, 4 or 5 months, and now they got to figure out why the gold stocks are the number one performing group, and by the way, why weren't we in it? So that, together with the earnings reports, which will come out here shortly. We'll certainly get the production reports starting next week. But the production reports aren't going to be the most important thing. I think it will be the impact of the higher gold prices on the earnings, which starts probably a couple of weeks out. And I think there'll be some quite strong earnings that will surprise the market, and people will find out that the gold stocks aren't nearly as expensive as people are thinking. Got it. Well, we'll keep an eye on those earnings reports as they start to come in. I would imagine, too, we end the year strong. A lot of these money managers will see the top-performing sector as the precious metals. That might help, too. I was going to mention one other thing, too. The demise of the cryptos is helping. It's not that it's over for the cryptos, and then the whole unicorn thing looks like that might be coming to an end here, okay, where you're buying some dream that the guy's going to make profit someday, and he never does. In fact, he loses a lot of money, and yet somehow we're conned into believing that it's the greatest investment ever. I think that if we pull money away from the unicorns, the FANGs, and then it really has to hunt down value here. I should also mention that there's some very interesting things going on in the physical markets. I mean, it seems obvious. I think you interviewed David Jensen recently, and he gave a wonderful description of what's going on in the palladium market. There's obviously a shortage there. When I look at what's going on in the silver markets, I watch the amount of silver that goes into the ETF in the last 5 days has been something like 6 million ounces. Well, you know what? That's 300 million ounces a year.
We don't have 300 million ounces available for investment, okay? And there are other ways of investing in silver, too. For example, I mean, I'm a buyer of silver, but I don't buy the ETF. I'm always worried that there's really nothing there. But lots of people would be buyers of silver away from ETFs. So the physical markets look absolutely stunning for the precious metals. And if that ever catches a bit of a sniff here, we could see some exciting action. And we are seeing exciting action in palladium, which is hitting an all-time high.
Yeah. Eric, one of the questions we had this week is kind of along those lines. Just as an investor, how do you value silver resources that are still in the ground?
You know, it's silver in the ground. You know, if it's worth $1 an ounce, it's probably okay. I'm just going to use the word okay. Of course, it depends on the grade of the silver. A lot of people don't understand that perhaps even 200 grams silver, it's only 6 ounces probably of recoverable silver. That's only worth about $120, $30, which is equivalent to about a tenth of an ounce of gold. So 2 or 3 grams. You really want grade to be significantly higher than 200 grams in my mind. So it depends on the grade of the ore, depends on the size of the deposit, and depends on the prospectivity. As I've mentioned many times before, one of my favorite questions, well, how big can it get? Okay, and that's the other thing you want to see. If you're only paying, let's say, 50 cents an ounce today, but it can double, maybe you're only paying 25 cents an ounce, so that's a pretty good deal. But I'm not locked into a number because you got to bob and weave with the grade and the prospectivity.
Okay, Eric, as we go to wrap up, I want to thank everyone, all of our listeners that take the time to send us specific names for commentary from Eric. Of course, you can tweet them to us at Sprott Money. You can email them to us at submissions@sprottmoney.com. And we get a list every week. We just simply can't run through all of them. But I ask Eric about all of them just to try to kind of cull the list and so we don't waste time with stocks he didn't know anything about. So we had questions this week about companies like Nexus Gold and Rise Gold, Spanish Mountain Gold, Red Star. All of these companies are ones that Eric has no comment on at the time. But I do have a couple that we can get into, Eric. Let's start with Pacton Gold, Pacton.
Well, Pacton, I bought into Pacton when it was moving into the Australian Pilbara Basin. Unfortunately, the Pilbara hasn't really manifested itself the way we'd like to see it manifest itself. Like we need a more consistent grade down there to make it truly economic. Now, they've also moved into Northern Ontario, and they seem to have some interesting properties in the Red Lake area. I'm still a significant owner of it, and I'm a watcher. I'm not a buyer, but at these levels.
How about a company called Kerr, Kerr, Kerr Mines?
Sure. I've owned Kerr. They have the Copperstone project in California. I'm a reasonably big owner of the company. They just put an announcement a couple of days ago, maybe yesterday actually, suggesting the timeline for production. I don't think the market took too well to the timeline because it keeps getting pushed out. Why, I don't know. But I guess they want to do more development before they commit to putting it back into production. Plus, they got to get at least one permit that they don't have. But I think, it's an interesting ore body. If they get the green light to go, I think it could be a very interesting investment.
And a company called Prophecy Development. Do you have any thoughts on that one?
Prophecy, yeah. Well, I recently invested in Prophecy on a very small level. They have 3 assets: a vanadium asset in British Columbia, a coal asset in Mongolia, I believe it is. But the most interesting asset is a silver property in Bolivia, in the Potosi region, that has had a significant 43-101, and I'm trying to remember the exact number. I think it's like 50 million ounces of silver at very high grades. And I think the company will start to focus on that silver asset. That was the reason we bought into it recently. That's within the last week or two. So a good grade, good size deposit, and of course the thought is that it can get a lot bigger with more drilling. So I'm looking forward to hanging on to that company and perhaps increasing my investments.
And speaking of silver, before we wrap up, just this note for all of our listeners: silver is one of the most popular things that you can purchase at SprottMoney.com. In fact, right now, the most popular item this week has been the 1,000-ounce silver bar. Man, I got to get me one of those. They're the easiest way to invest, hold, and store your physical silver. Plus, that margin per ounce is smaller than other smaller weight options like coins and small bars. You can find a wide selection, 10-ounce, 100-ounce, even these 1,000-ounce bars at SprottMoney.com. So please go there, check it out, or, of course, just give us a call anytime, 888-861-0775. Eric, my friend, I hope you get something on the line later today, and you maybe fry it up in some butter and pour a nice glass of white wine with it.
Yeah, if I get a big one, I'll send you a picture.
We'll do that. Take a picture of you standing next to it.
I'm saying that for the benefit of the crew, okay? They're kind of enjoying it. And by the way, I do own a lot of 1,000-ounce bars, but I tell you, they're not nearly as pretty as the 110-ounce bars, okay? Because they're not all shined up with a nice little seal on them. But of course, they're very inexpensive to buy because you don't pay much of a premium for them. So I'm a big buyer. Have been a big buyer of those recently. So
nice.
Get in the game.
All right, my friend. Thank you for your time today. Have a great weekend.
Okay, you too, Craig. All of us.
And from all of us at Sprott Money News and SprottMoney.com, thank you for listening. We'll talk to you again next Friday.